Good evening. From here on and now, it is time to an in-depth analysis. We chose a single company in the market to analyze in depth. First, we're going to hear the company's CFO from that company concerned regarding the current situation around the company. After then, we will find out its value using absolute and relative valuation modeled from experts in the market. And finally, we suggest our aggregate opinion whether to buy, sell, or hold. Today, the company we chose is KT&G, based in South Korea. We have the current CFO of KT&G, Ludwig Vogel, joining us, talking about KT&G's current situation.
Good evening, my name is Dr. Ludwig Vogel, and I'm currently enrolled as CFO at KT&G, which I will introduce today. To clarify in detail where our revenue comes from, we will have a look at the table on the screen, where we can see the weighted profits of our divisions. Our divisions are tobacco, ginseng, real estate, and others, for example, like magazine. Due to this, I think it's necessary to explain our tobacco sales. It's nowadays a monopolistic market because it has high raw material costs and marketing costs for maintaining our customers' brand loyalty towards us. Till 1998, our sales were continuously increasing in the domestic market. Unfortunately, since 2002, as the prices of cigarettes increased twice in a year and continuously anti-smoking policies were reinforced, it started decreasing. A similar trend can be found for the long-term total demand, which decreased steadily. For foreign exports, however, we were continuously improving and by now are exporting in over 50 countries globally. Furthermore, we are now ranked as the 5th largest tobacco company worldwide. The core export regions are the Middle East, Middle Asia, and currently we also try to export more products to the US, which counts as the 2nd largest tobacco market. As a result of this trend, foreign sales are now exceeding domestic sales on weight of total sales. Thank you very much for your attention, giving me the opportunity to represent KT&G today.
Next up, we're going to analyze KT&G's value based on an absolute and relative valuation. First, we have the DCF valuation, which is one of the absolute valuation model within finance. Analysts Edward and Joseph from Sungkyunkwan Investment Trust will be joining us shortly.
Hello, I'm Edward, and I will explain in DCF valuation. First, we think KT&G's current fundamental EBIT is 1,000 Korean won. Because the market circumstance, KT&G would grow slowly. We start from 2050's earnings, but the earning has exceptional gains. So we will cut out of that exceptional gains because the gains comes from retail margin by government price adjustment. So we've got that 1,000 billion won. According to its business report, the firm has about 25% of idle machines, and there is no steep fluctuation in their returns. Then we thought ROC and reinvestment will be similar with those in the past. In this context, these are our cash flows and growth rate. As I said, we consider 1,000 billion as our EBIT, and we conservatively expected that KT&G will get lower ROC than current ROC to 20%. And we expect its reinvestment rate as 25%. After the near 5 years, then the firm's goes worse where we stop. Cost of debt and capital structure. We estimate KT&G will be constructed with 25% of debt and 75% of equity. When calculating of equity, we use 20 years Korean government bond as a risk-free rate and 0.7 of bottom-up beta from expected future capital structure. As a result, we've got 6% of cost of capital and 3.3 after tax interest rate. So we can earn KT&G's WACC as 5.31%. This WACC and FCFF, we suggest KT&G's fair value is 138,000 won, and which is bigger than this current price. So what we recommend is to buy the stock by now.
Thank you a lot. Well, I have just two questions for now. First of all, do you have any opinion regarding pros and cons based on that DCF model? And what is your suggestion to enhance the company value?
Well, about the pros and cons of KT&G, I prepare explanations, especially e-cigar market opportunity. E-cigar now has pros and cons for KT&G. If KT&G expand its market to e-cigar, they can get profit, but also decreasing of total demands of cigarette. As you can see, the graph over here, annual growth of global sales of e-cigarette is pretty high and is about 78% now. And the low level line shows the increasing of total sales in global, and you can find it was almost 0 in 2009, and now is expected to grow up to 16 in 2019. According to the Kantara Group and World Health Organization, it still has low level comparing with normal cigarette. About expanding of cigarette demands, lots of global tobacco company already tried to take position on e-cigarette market using M&A strategy. So it can be said KT&G is maybe late right now, but as the e-cigarette market is now expected to grow rapidly still, KT&G still has a chance to expand its market to e-cigarettes world. So for doing that, I suggest to take aggressive M&A strategy for going through the e-cigarette market. For M&A purpose, ECIG, which stands for Electronic Cigarette International Group, can be an option. The table shows how ECIG take positions in markets. So by doing so, I think KT&G can make their cons to pros and enhance their value as well. Thank you.
Okay, thank you very much, Edward and Joseph from Shinhan Investment Trust. As you heard before, it is now evaluated as undervalued in the market using DCF value. Then what result will come out using a relative valuation? For this now, we're having Professor Steve Austin from SKKU.
Good evening. Before doing the relative valuation, we should pick up competitive companies to compare with KT&G. There are lots of characteristics in KT&G, but I picked up two big points. One is addiction, and the other is monopoly market. So focusing on this point, I selected a few competitive companies, including Lotte Confectionery Corporations, Nongshim, Haijinro, Nexon GT, and CJ Jeojeodang. First, we collected as many multiples and their number as possible, and compared it of KT&G with other competitive companies we chose. To explain some key factors, KT&G's PE ratio and EBIT growth rate is 16.83 and 3% each, which is relatively low compared to its competitive companies. On the other hand, its payout ratio, ROE, PB ratio, and net margin is high compared to the others, while ROE ranked the highest among those 8 companies. Next, we did the regression between these multiples and analyzed the KT&G current stock price, whether it is low or high compared to its fair value. As you can see, considering the PE ratio multiples, KT&G is undervalued compared to other relative companies. Since PE ratio of KT&G is 16.83, and considering the expected EPS as 7,961, we can get a fair price of 134,001. To sum up, I recommend you to buy with the target price of 134,001. So it is now evaluated that KT&G market price is now undervalued, which is same result as DCF valuation model.
Thank you, Professor Steve Austin. So until now, we covered KT&G's brief info, including their current situation, evaluations using DCF and relative valuation model. And as a final stage, Jonathan Spang will summarize the total information and suggesting a final conclusion.
Thank you, Louis. Yes, currently KT&G is now the 5th biggest tobacco company in the world, and its export is now exceeding domestic sales. It can therefore be expected that they will continue to grow. Therefore, the conclusion for from our DCF valuation and the relative valuation is to buy the stock. Buy, everybody.
Thank you very much, Jonathan. So this was KT&G's valuation until now. We will provide useful information on next time, and well, thank you for watching for tonight.